Okay, we want to talk about a strategy that we're seeing. How can we make it so that you have a few more strategies to either sell a home or to put more buyers together? And how does the mortgage help you with that? So, a big thing we're going to see is the prevalence again of people with pretty high mortgage penalties. And so, every mortgage has a penalty if you break it out early. 70% of people break their mortgages early. It's very unusual for a client to sell their home and to not have much of a penalty. And you may think it's not even a relevant thing for you to check into, but as we look at markets where it's slower, especially when clients have taken fixed rates, and you may also think, well, rates are higher, so their penalty won't be that much. That's actually not true. Fixed rates are calculated by what's called a few different calculations that vary from lender to lender, but specifically they look at something called posted rates and something called comparison rates. And it basically means that the bank always wins. And so you're going to see the moral of the story is you will see fixed rate penalties that are pretty high, $20,000, $30,000, not out of the question. Here's the worry. If I have a client that bought in the height of the market, maybe they put 5% down or 10% down or whatever it might be, there could be a number of scenarios that exist. We have the risk of them coming to closing, not being able to clear title. Or not just being able to clear title, but maybe netting a lot less than they hope to, which could prompt some type of different activity on decisions on what they're making. Now, if I get in the habit of asking a client about their mortgage prior to, and I can see they're going to have a penalty, and every mortgage can have a penalty. Is there a way for my client to decrease their penalty? And I'm just talking about, having a last minute thing where they have a big penalty and they can't clear title. But is there a way I can help my client net more cash as a result of the penalty? There is. If I make a prepayment on my mortgage 30 days prior to closing, this varies from lender to lender. So you'll want to make sure that you know which lender will do it. If I do that prior to 30 days to closing, I do then run a situation where I reduce the penalty. So most mortgages allow me to make a 20% lump sum. So for example, if I have a mortgage of $1 million and I pay $200,000 30 days prior to selling the home, I've reduced my penalty by 20%, resulting in some clients in thousands of dollars back in their pocket. What a great strategy to launch to your clients. Now, there's a few ways this can be done. The client can make this decision. They could use their own cash. Two, this is something you could front to them or anything like that. And then, you're going to get reimbursed in short order. But these are strategies that mean that at the closing table, that seller gets more money in their pocket by you encouraging them to make a prepayment prior to paying out their mortgage and giving them the resources to do that. If we can help with anybody, if you want to run any strategies with us, we want to help you with that. Please do take the time to share this with your colleagues if it'd be helpful to any of them. We love to help you with any deals that we can.